2017 has been a great year if you're a Bitcoin investor. Cryptocurrency up more than 1,700%. Well, let's take a look at a Bitcoin from a technical perspective. The president and founder of allstarcharts.com, JC Parets. Good to see you, JC.
Good to be here. Thanks for having me.
All right, so everyone's talking Bitcoin in the past little while, but a lot of the feeling is that it's a mania. People are just rushing into it. They don't know what they're doing. You're actually taking a look at the charts, taking a look at the technicals, and that makes you bullish on it. So walk me through that. What are you seeing in this meteoric rise that tells us that this actually has legs?
You know, I'm fortunate in a lot of ways to be friends with a lot of venture capitalists and a lot of early stage investors. So Bitcoin for me has just been another asset class that we analyze really in the same way that we look at stocks and commodities and currencies. And we've been doing this for years now. It's become more mainstream, as you and I were just talking off air. So from a technical perspective, we are in uncharted territory. In other words, we are making new highs that we've never seen before. So traditional support and resistance levels that you might see in a stock that's been trading for 50 years or something like that isn't really useful in this case. So we do Fibonacci projections, and those have actually worked out very well. So just like any other trade, not just Bitcoin, but shares of Microsoft and Apple or crude oil or gold, the idea is to identify a specific risk level and then a potential reward. So the risk level has been just under 12,000 with an upside objective of 19,100, and we are very close to that level now. So from a risk reward perspective, the ceiling right now is 19,100. If we are to get above that level and start getting up to 20,000, 21,000, that 19,100 level would theoretically become a floor, would become support. So it would create a new risk versus reward proposition. So while right now the target is 19,100, if we were to exceed those levels, the risk would be that 19,100 and the next target would be up near 31,000, which is where I do think it's going. So moving forward, as we approach this level, we want to make sure that we are aware of the risk. That's the most important thing, particularly with something as volatile as a Bitcoin. So moving forward, we only want to be long Bitcoin if we are above 19,100. Below that, I think neutral is probably the best bet.
So if we get above 19,100, you're seeing a jump up into the 30s. That is a big move. How fast would that move occur?
You know, everything is symmetrical, right? So markets tend to move in a very symmetrical way. So it really shouldn't take that long based on what we've seen in the past. But I try to worry less about where I think something might go, and I try to focus more on what the risk is, right? I don't care where you think it goes. Where are you wrong, right? That's the idea. And I think being long Bitcoin at this point, only if we're above 19,100 is the best bet. In a very similar way to months ago, the trade was to be long only if we're above 7,400 with a target above 11,000. And we've had multiple risk versus reward propositions just like this over the last couple of years. This is really nothing new.
All right, JC, you're also taking a look at gold. There's been some discussion in the past couple of months as Bitcoin really heated up and other cryptocurrencies that people don't love gold the way it used to. Do you love gold?
I do. I've loved gold short, so I suppose yes. You know, they're really two different trades. I just find it very interesting that, you know, the irresponsible conspiracy theories about the end of fiat currency, how we need to be buying all of this gold for, you know, to protect ourselves. Meanwhile, gold's done nothing for 4 years, and if you would have bought pretty much anything else during that time, you would have made money. So it really has been a loser of a trade, right? So, and to take that a step further, because it's been such a loser of a trade and gold is owned by losers, right? The people who have lost money in this trade, that to me is evidence of a lack of institutional ownership, right? So when you see Amazon correct or Google correct or Microsoft correct or Apple, the institutions step in and start buying. Why? Because they're already in it. Right? So there's institutional support. In the case of gold, that's just simply not the case. I just see continued weakness. I know that I sent you guys a chart. I'm not sure if you have that, but any way you look at gold, it is not an uptrend. So it's either a downtrend or a sideways trend, and it continues to be something that we want to be selling short very aggressively. And from a risk reward standpoint, getting back to that risk management, If we are above 1,300 in gold and we start holding above that level, I would argue that it's probably best to maybe reevaluate that bearish thesis. But as long as we're below 1,300, we want to continue to be very aggressively short gold, silver, gold miners, junior silver miners, short them all. I think in all likelihood gold is going below 1,000. But again, from a risk-reward standpoint, we only want to be short these metals if gold is under 1,300.
Gold bugs aren't going to like you today, JC. Only got about a minute left with you, but I want to ask you about traditional equities. If people don't feel that great about Bitcoin and they're unsure, you actually have a pretty decent call for the S&P 500.
I do. I actually have a good reputation with the gold bugs. I used to be one back in 2009, 2010, but our upside objectives were already hit. So we've moved on to bigger and better things. And as far as the S&P 500, the path of least resistance is still higher. Getting back to this risk versus reward proposition, sure, I think the S&P 500 goes to 3,000, but at this point, where we are today, we only want to be long the S&P 500 if we're above 2650. If we're below that, then we want to be neutral S&Ps and focus more on individual equities and the sector rotation that we continue to see. But yeah, if we're above 2650, path of least resistance is higher. I think we go to 3,000.
All right, JC, always fascinating stuff. Thanks for joining us.
Thanks for having me.
That was JC Parets, founder and president of AllStarCharts.com.